In the early 1960s, when international travel became easier and increasing numbers of British citizens spent time working abroad, major banks began to open offices in Jersey to provide banking services for expatriates. This heralded the beginning of the offshore banking industry, and Jersey has been at the forefront of its growth ever since.
A lot of the businesses that have grown up here have been around managing wealth that's created either by for non-domiciled people, resident who are in the UK, or for expatriates or people around the world who've got some kind of connection with the UK market.
Gradually, as private client and related trust and estate planning work grew, the jurisdiction's banks broadened their range of services to personal and business customers, and the industry flourished.
What differentiates Jersey is, if you like, the offshore business, which tends to span everything from commercial banking to trusts, to asset management and private banking.
Many international banks from continental Europe, North America, South Africa and the Gulf region have opened offices alongside the existing British clearing and merchant banks. The jurisdiction's regulator, the Jersey Financial Services Commission, will only authorise the global top 500 banks to establish a presence here. And this policy has ensured that only banks of the highest calibre operate from the jurisdiction.
The fact is that offshore centres like Jersey facilitate something like 10% of the global investment flows. And so they've got a key role to play in terms of attracting funds into the European marketplace, particularly London, which is the largest financial centre in the world, but also out from European financial centres, London again being the main one, and into developing markets around the world. So all the range of services you expect to go with that, you find here in Jersey.
The fact that there has been a financial crisis and many banks have been affected by that, a big issue in all of those and lots of those cases has been liquidity. And one of the things that the Jersey banks and the Jersey banking model traditionally has done is it's gathered liquidity and passed that liquidity back to the parent banks. And this is a very important point highlighted by the Foot report recently commissioned by the UK government, which identified that the City of London is a net beneficiary of funds flowing through these jurisdictions.
All licensed banks in Jersey are members of the Jersey Bankers Association. The JBA acts as a consultative body and lobby group on a wide range of topics, including regulatory matters, legal, marketing, taxation, recruitment, risk and compliance.
We have a very good relationship with the British Bankers Association, which keeps us informed as to what's happening from a UK perspective. We have less formal relationships with bankers associations in other jurisdictions. That's normally through membership. So we have banks operating here that have presence in Guernsey, a presence in the Isle of Man, and we will know what's happening in those jurisdictions either through their banking associations or through our membership.
The Jersey Financial Services Commission is responsible for the regulation, supervision and development of the financial services industry. A member of the International Organisation of Securities Commissions, the JFSC maintains its independence as a regulator, but works closely with those in the industry, with JerseyFinance and the government.
Jersey has maintained a conservative banking policy for something like 4 decades now. You'll hear the phrase top 500 policy, and that means that Jersey has only allowed in banks that belong to groups in the top 500 worldwide as measured by Tier 1 capital. And capital represents the strength of a bank's balance sheet. Our policy nowadays is far wider than that. And we published a revised licensing policy last year. So if I could sum up the key tenets of that policy, it would be membership of the top 500 policy, so capital strength, large international groups with a high capital strength and good levels of competence. They are the banks that we allow into Jersey.
The Jersey regulator has imposed high standards. Now obviously there's a balance to strike between over-regulating and if I can, under-regulating. And I think Jersey's got it right. If you look at the standards that are here around anti-money laundering, the the due diligence that we have to go through before we open accounts in terms of KYC, all of those standards that you'd expect or you'd want in a high quality financial centre are here. Now, for a company like HSBC and the other large brands that are represented here, that's very important because we wouldn't want our brand to be associated with a place that didn't have the same high standards that we do.
Jersey has a lot of positives, a very well regulated jurisdiction, which again in recent years has been independently endorsed by internationally recognised bodies, which is extremely important. People want to put their money where they know it's safe. The island has a history on the banking side. We have a range of services. We've been at this a long time. We know what we're doing, and we're adaptable.
Evidence of the island's adaptability is borne out by the introduction of a depositor compensation scheme in 2009. Individuals can now be compensated up to £50,000 of their savings.
Jersey didn't have a scheme in place until last year, and it didn't see any downside to that up until about 2 to 2.5 years ago. And then the stressed circumstances that have been seen around the world led depositors to look for whatever protection they had and to reassess how safe their deposits were. And a depositor going through that thought process would look at Jersey and say it doesn't have a depositor compensation scheme. So banks in Jersey saw customer deposits leave the island and not necessarily leave the banking group. They might go to another jurisdiction, the same group, which did have a compensation scheme. And there was therefore a great commercial need to introduce a scheme. In addition to that, it became clear from a number of things said in the UK and in Europe that if a finance centre was to be credible, then it would need a depositor compensation scheme in place.
While the benefits to individual clients of the scheme are clear to see, not everyone agrees that without it, the island's banking industry would have suffered as a whole.
I genuinely don't believe that when a company puts their deposit, or when a customer puts their deposit with HSBC or any of the other big names that's represented on the island, that they're looking at the deposit insurance. I think they look at the strength and integrity of the institution that they're putting their money with. So I guess the proponents of the scheme will say that it added to confidence. I think there's a lot of people in the industry who are already well capitalised, like our own institution, who say it adds to cost. But at the end of the day, if it does give the market confidence, if it generates confidence in the market, it's a good thing for the industry.
Jersey also plays its part in keeping an open dialogue between tax authorities. The island has entered into bilateral agreements with all European Union countries to deduct tax from the interest payments made to people resident in EU member states.
A lot of effort was made 10, 20 years ago to really clean up the industry. And I genuinely believe that businesses here welcome actually the move towards greater transparency. We spend a lot of time and effort ensuring that we're doing the right business. As far as we're concerned, European Savings and Tax Directive ensures that we do. And I think most people welcome that. A small caveat, I think Jersey's quite rightly taken a stance of saying, let's move towards the goal of the goal of full transparency at the same pace as competing regimes, and I think that's only sensible.
Jersey's 50-year track record in the area of offshore banking is self-evident. The flexible approach to international policy changes is testament to the island's capacity to engage with and feed into the global economy.
There's almost no ultimate guarantee of a bank's safety. It's a fact of life that around the world banks do collapse. You'll have seen circumstances where banks have been saved, those that have been considered to be of systemic importance. Countries around the world have saved those banks, but banks do fail. No bank has failed in Jersey in the last 40 years at least because of the very conservative policy that we've applied here.
It's important that Jersey continues to develop the relationships that it already has and which have served us in good stead over the last sort of few decades. But I think it's also important that Jersey looks to develop new ones. A lot of wealth is being created in the developing world rather than the developed world. A lot of investment is going into the developing world. So I think one of the keys for Jersey is looking to markets like China and India, the Middle East, looking for opportunities to develop more business with those expanding markets. And we've been well served by that as a financial services industry by JerseyFinance, which of course has set up offices in those locations.